everybody. We are going live with Mark in 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. I'm Mark Sebastian. I am your only option. Welcome to the State of the Market. This morning, we're going to continue to talk about the action in the markets, what's going on with oil, Iran, the VIX. We're going to be kind of circling back to the NVIDIA SMCI story just a touch. And then we're going to be bringing on our own Olivia Vaz. And she's going to talk about the levels she's watching, not just for today, but for the next week or so, to see, hey, when is there some opportunities for some short-term bull trades or bear trades? I know market conditions have changed for her, so I'm excited to have that discussion with her. But let's start by looking at markets as a whole. As we come in, the S&P 500 is down about $34, call it 0.5%. Dow down about 0.5%, and the NASDAQ 100 also down about 0.6%. IWM, which at one point looked real strong on Monday, has pulled back a touch. I would point out, though, it is still outperforming the other major indexes. If we throw in, let's say, the Qs over the last 3 months, if you look, the Qs are down approximately 6.4% in the last 3 months. IWM is down about 2.6%. The diamonds, another area where I think you should see strength, are basically tracking the Qs. Why? And you're going to say oil, right? Everyone's like oil. That's and oil really is the lead. It is driving the bus. Currently up about 3%, trading right at the highs from Monday, but not exploding higher. This would normally, what we're getting out of the markets is kind of what I'd expect out of something like this. The real problem with markets continues to be interest rates. You look at TLT, yes, it's off the lows, but it's on it. It's at the high of the day, and it's sitting at the lows from Friday. This may not sound like a big move to you, but for bonds, this is a huge move. On the 27th of February, less than a month ago, TLT closed 90.82. It's given away $5. That's an over 5% move in long-term bonds. That is a massive move in that area. IEF, the 7 to 10 year bond, similar type behavior. It's gone from 97.99 to now 94.85. A $3.50 move. Call that a little over 0.3%. Again, a really big move in the 7 to 10 year market. And that is having a direct effect on the industrials. And this is why I think the industrials are going to be your play coming out of this Iran conflict. Because what I want to point out is what was happening prior to this Iran conflict. Leading into things, here's our Iran conflict right here. Leading into this, look at the outperformance of the Dow Jones relative to the Qs. On the 10th of December, the Qs were up here. by February, they were trading basically flat over the last 6 months. It kind of hung out there. So you can see at their peak, we were still up about 5%. That happened on January 28th when the S&P popped out. But look, the Dow kept going higher, and the Qs started selling off and have continued to sell off. The reason for this outperformance that we saw in the month of February, combination of industrials taking advantage of, inferring AI, but more importantly, the anticipation of rate cuts. You look at the CME FedWatch tool. Come on. This will populate in a second here. I don't know why it's so slow. But you look at the CME FedWatch tool, what you're going to notice, I'll have this up in a second. What you're going to notice is that we've seen a sea change in market expectations. I want to go to December of this year. And what I want you to concentrate on, I'm going to cut this so it's easier to read. I'm going to make this super easy for you guys to see. What I want you to notice is the change. All right. Right now, we are pricing in a 65% chance that by December, we don't have a rate cut. But what's key is they're now pricing in a 27% chance of one rate hike. One rate hike. A month ago, markets were pricing in a minimum of 2 rate cuts with about 40% odds that we were going to get 3 rate cuts in a month. Here's why the industrials are going to be your play when the conflict ends. Now, oil, we'll have Tim on Thursday. And I want to talk to them about this in more detail. Oil leading into this conflict, and this is something we talked about before this even began, had about a 10-point risk premium in it. When the conflict ends, that risk premium is going to shrink. At the same time, we've had damage in the Middle East, which is going to keep energy prices more elevated. So where does that put us? Well, on one hand, we've got risk premium shrinking. And on the other hand, you have reduced output, needing to repair things like that. I think when you add them up, when this conflict ends, oil ends up probably about where it was before the conflict started. If you look, USO was hanging out around 77. The risk premium was kind of 67 up to 77. Nobody seemed to mind energy at 77, USO at $77. BNO was trading around 33. It's currently 50. And prior to some fear building in, it was about 28. See, folks, this part is risk premium. I think we probably end up maybe a little higher, but about where we were. So what does that mean? That means I think they're underpricing the potential for rate cuts toward the end of the year. Energy prices dropping, bonds rallying. Coming out of this, diamonds and IWM are going to be your trade of the year. Everyone's going to jump into SPY. or the Qs. But you're smarter than that, because you know that the diamonds and the Russell, which were already leading for several reasons, are going to pick that right back up. And it's going to be and they are going to lead performance. Yes, XLE will drop for a little bit, but you're going to see a big rally in XLI, XLP, XLY, XLB, every other X outside of XLE, and maybe XLU, maybe XLP because of the safety aspect. They're going to rip. And the winner out of that is going to be RSP, equal weight S&P, diamonds, and the Russell 2000. So I want you guys to write those names down and be ready to trade them, because that initial pop we get, S&P and Qs are going to lead, diamonds are going to lag, and you're too smart for that. You're going to jump in. It's going to be great. Speaking of diamonds, let's bring in our own diamond of chart making. She's diamond clad as the pharaoh of the Fibonacci. She is the one, the only, Olivia Vaz. Good morning, Vaz. Looking good.
What's up, guys? This is my new trading look.
It's a good look. You kind of look like kind of one of those like from like a late 90s action movie, like the bad guy's girlfriend that shoots up shoots up everybody. You know what I'm talking about?
Yeah, man, I do.
You know?
Mm-hmm.
So it's a look. It's a good look. I'm on board. I'm a buyer.
Thank you.
So Vaz.
Well, thank you. Yeah.
All right. Obviously, there's a lot of geopolitics going around. There's tons happening, but that doesn't restrict us from one of the stories we've been talking about is what? Day trading, 1 DTE, or you are going out 6 months, 9 months with the Series Club. You happen to be the master of two things: the 0 DTE trade, and I love working with you because we've had this ability to make these big calls ahead of time, right?
Oh yeah.
Hey, I know the headline says to flip and go long, stay short. All right. I know everybody wants to sell this. We're going to gap down tomorrow, but I want you to buy it because we're going to rip. Your ability to look at the long-term charts and find those spots is uncanny. And just another reason why you're the pharaoh of the Fibonacci, diamond-clad pharaoh of the Fibonacci. Let's take a look at the charts and see and talk about what you're seeing today.
Let's do it, guys. Yeah, all I'm doing is just looking. That's really it. I'm not using. I'm shockingly. I haven't yet used volume profile or Fibonacci on my charts because I was really just looking at what happened before, and we had a very similar situation. The end of December of 2024 into January of 2025, consolidation, market was running out of steam. It didn't want to gap up. Like, guys, this is what bullish conditions look like. You have bull flags. Sure, there's some pullbacks, but they're quickly bought. Where when you know that you start to run out of steam, you could see, hey, that pattern's breaking. And the longer that it takes, the more likely it's going to break down. And so when I traded this last year, I made some notes on what to do to get in a little earlier. And the same thing happened. I mean, it was like a gift from the trading gods. The same thing happened late December into January, and we started breaking symmetry. once that started happening, that's when I was on State of the Market. Like, guys, we're going down, we're going down, we're going down. And I've been trading this short in increments because bearish conditions, they have fierce rallies, Mark, especially right now with there's so much news. We're in a war. So there's so much news that triggers the algos. And that's why I like to step on the gas when something clearly shows that there's momentum. Just like we see momentum to the upside, you can see momentum to the downside. So when I see that, I press the gas. And then when I'm expecting the bulls to come in, or if there's, over the weekend has been hard to trade because usually nothing is really going on over the weekend. So when there's no news, that's actually positive to go higher. So that's kind of how I've been stepping on the gas and the brake, like a Formula One racer in this.
Yeah, because markets get tired, right?
Right.
Consistent bad news that doesn't get worse can actually lead to the formation of a bottom, believe it or not, or kind of a slow death march lower. You stop getting the wild moves lower. And we might be in that place right now, in terms of, what news is going to really come out to make this significantly worse other than a spike in oil above its former highs.
Let me interject. The reason I think that we will go lower, that we have not reached the bottom yet, is because we have not, in this period, through my work and research, we have not reached capitulation. Now, I'm not trying to doom and gloom. I'm not trying to scare you guys, but when you have a move like this, in order, like Mark was saying, for this to get exhausted, it needs that capitulatory candle. We need a serious gap down. We saw that with the carry trade. We saw that with this incident in March. Like, look, this looks awful. And then you get a little buy, and then you get your capitulatory candle. Yeah. So I just want to show you what that looks like. Here was beginning of last year. We started to sell off. I just want you to look. That's what we're doing. Then you get like a week of buying, maybe 2 weeks of buying. Then we break that buying. And then you get, this is the capitulation right here.
Mm-hmm.
That candle. That is the easiest trade you will ever take in your life because it comes in threes. Boom, 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 and then you step in and buy it. It's process.
Yeah,
so
it is.
That's why
part of me wonders whether we would have. Part of me wonders whether we would have gotten that on Monday if there had not been some sort of that weird announcement of the negotiating, because Friday's close, which you and I absolutely, Friday's close was fun. Monday, the selling into the bell was kind of scary, and you don't usually see that. When you see that on a Friday, usually leads to some real ugliness on Monday, and then we got a lifeline from President Trump.
Right.
So where do you see us in this process right now? Are we're at leg 2, or are we still in leg 1?
I can't really identify. I can't tell if we're still in here or if we're starting to try to do this shimmy sham. Just looking at news this week, there's really nothing that sticks out to me to continue lower. But I'm not saying that that's going to help boost us higher, because the problem is there's something in this framework that was already flawed, and that's what the market is reacting to. It's not Iran and all this stuff, they're just catalysts to help bring the market lower, which is what it wants to do. And I'm not saying it's not important, because as you could see, we got that announcement on Monday, and obviously the market is attached to it. But we've already been breaking down besides that. I will say, looking at the let me do a fib. Now this is when I don't know, that's when I start pulling in my technicals. But
Mm-hmm.
that's why the timing is it's you must be nimble to time this, but I would say I think we need to go down a little bit more before we get the Jameson jump and then the capitulation. And the market will just unravel itself right before our eyes. And we're like, why is this happening? And then we'll figure it out when it's too late. But it doesn't matter because, like Mark is saying, when you are just in the mix of it and trading 1 DTE, 0 DTE, like as a day trader, we see the news reaction. We see what the market wants to do. We see how it reacts. Like today, we had ISM manufacturing at 9:45. The market, the algos caught on, it ripped higher, and now we're kind of shuffling around. Like we don't know. We're trying to test it. Was this move a serious move up, or are they going to slam it lower? Personally, I think that they're going to slam it lower because if you have a positive reaction, we should continue. We shouldn't be like pausing here. But it's just kind of getting into that psychology of trading.
Yeah, and Tim Colby has been saying, don't believe anything until you see boats going through that strait, and until we see boats through that strait, then no deal is really a real deal. And that is it, and there's now kind of competing ideas coming out of Iran, right? You've got the Iranian Guard saying there's no talks, and meanwhile we're hearing there's back channel with an entirely different group in Iran, so there's some splintering. This could get really messy before it gets before it comes to a resolution. And you're right, we haven't had that panic.
No.
And if you look at VIX futures, we've got, if you want to show my screen here,
Yeah.
If you look at VIX futures, what are they telling you? They're telling us near term vol is high, but April's pricing for a little bit of pullback, but there is no rhyme or reason. We are flat as a pancake between really May going all the way out to November. So that, to me, is the market throwing up its hands and saying, we don't know when volatility is going to recede. That is what that is telling me. Because we should be seeing this back end of the curve down 20 at 22 or 21 if there was any anticipation that volatility was going to come in. It's kind of astounding how flat everything is in VIX outside of the very, very front end of the curve. And that, to me, screams of an extremely confused market that kind of, like I said, threw up its hands and says, we don't know.
Hans is talking about the Manhattans that we had at our VIP dinner. And he too
that
is
was
saying,
nice.
like, Iran is a distraction. The market has bigger problems. You could just see it. And again, I don't know. Everyone has an opinion what that bigger problem is. I don't know I'm sitting here in my sunglasses and aviator stippy. You should not be asking me what the real problems are with the market. But what you can ask me, as I have my poker face on, is
although interestingly, Vaz, I would trust your opinion over 99% of the people that are going to throw on CNBC that are wearing custom suits, because those are a bunch of guys that are fed a bunch of talking points that have to be, run through compliance, that then have to be looked at by their traders to make sure that they're not giving away too much, that then get, by the time they get to you, you're basically eating dry Melba toast.
But I want to flip my screen real quick on that note, Mark, because if no one was listening to me up here saying we're going down, why the heck would I listen to anyone down here but me, because that is just, that says a lot. Does this look bullish right now? No. We gap down. They're trying to, buy it up, because obviously with the gap
This is
down, you might get
America.
some people picking out, buying, blah, 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 blah. But I feel like we're going to roll over really bad. And when we do, there are massive levels down here that will lead us. And I'm just waiting on the sidelines. We do have a bearish game plan today. That zone did
We do.
trigger. ISM came out around 9:45. They bought it up. So we're kind of jumping around the zone right now. But what I'm excited for is when, like, there are so many levels to like grab lower, and that's going to be boom. That's going to be the roller coaster that will lead to the capitulation. So later today, guys, there's really, we have nothing. There's nothing else. We had ISM at 9:45. We have Fed at 6:30. The market is on its own right now.
Yeah. And, it's probably going to be somewhat inside, feels like today a little bit, unless we get more, more news bombs. But, I'm with you. I think we're going to get that seminal moment. And when that happens, though, that is going to be the buying opportunity of the year. It's going to be your opportunity to jump in. And Vaz and I are going to be here to guide you through that process.
Can I say
we'll
one
come
more
on
thing?
and say, yeah.
There is one stock that one of my members actually gave to us in Trade to Close. It's called PL. I think that
Planet Labs,
space
yeah.
stocks, I know people make fun of me with ASTS, et cetera, but these stocks, they thrive in environments like this. There's many reasons why. We'll, if you guys are part of Trade to Close, we could talk about it later. But it just had a nice earnings gap. I want to see if this can hold. If we can hold for another couple days, I think Planet Labs would be a really nice buy. It's like buying ASTS in its infancy again. So just keep an eye on those. And if it sells off, great, wait for it to fill the gap and we'll buy it again down here. Just want to throw that out. Planet Labs is on my radar.
There you go, folks. Planet Labs.
Mm-hmm.
Let's see if we can find an entry there. You're right. There are opportunities. There are stocks that make some sense if you're willing to go long term and start investing in. That's why we have the Series Club here. If you haven't joined Series Club, you should seriously consider it. But in the meantime, there's the opportunity to trade the game plan or Project M&S and do really well in this short-term swing market. But again, when we get to this bottom, and we're going to get there, Vaz and I will be there to tell you, hey, we think we're at a bottom. Now, we're probably not going to give you the exact trade we're doing. That's going to be for our members. But, we're going to be here to guide you through, which is why you need to be here every day at 10 a.m. Eastern time with myself and Vaz and, Tim and Andrew and Leisha and Hans, the whole gang, because we're here helping you through this muddled market right now. And again, we're not there yet, but I do feel like there's going to be an opportunity in the next couple of weeks that is going to present you with your trade of the year. And Vaz and I can't wait to talk to you guys about that when it pops in. All right. So Vaz, if you were interested in joining Game Plan, reach out to the team or DM them here and or call the team 888-872-3301. Game Plan's 1 year anniversary is approaching, so keep an eye on your mailboxes for that one. And again, we just launched the Series Club. You're looking for some long opportunities. You're looking for the opportunity to jump in. Andrew put on his first official Series Club trade yesterday. There's still time to get into that one. Click the link or give the team a call, 888-872-3301. Vaz, thanks again. Thanks for coming by. And I can't wait to see you at 3 o'clock at Trade to Close for another banger like we had yesterday. We had 1,000% winners in the last 10 minutes
that
yesterday.
That was insane.
Folks.
That was And this is why you diversify your portfolio, just like you diversify your services. I almost said series. I want to be part of the series club. That sounds fun.
It is fun. Well, we're gonna have we'll have a series club meeting at Series at some point.
Sweet.
Folks, yeah, when you talk to, so again, give the team a call, 888-872-3301. Vaz, again, I'll see you later. Let's have another banger today on Trade to Close. So for the diamond-studded pharaoh of the Fibonacci, Olivia Vaz, I am Mark Sebastian. I am your only option. We'll be back tomorrow at 10 a.m. See you then.
Bye, guys.